Hello, welcome to Renewal Financial Services Homeownership 101. I am Angela Keys, Chief Operations Officer for Renewal. Today is the day you've discovered that you're ready to purchase your first home or perhaps buy again. Unfortunately, you have a few reservations about the home buying process. It's very normal to experience fear and apprehension when considering the purchase of a home, especially with the state of today's housing market and the high rates of foreclosure. This classroom is specifically designed to serve as a buying guide to help you understand the home purchasing process, and we will help you take the right steps to increase your chances of having a pleasurable purchase experience. Renewal's 10 steps will guide you through the maze of what is purchasing a home. The top 10 steps for purchasing a home include: Step 1, figure out what you can afford. Step 2, know your rights. Step 3, fix your credit. Step 4, shop for a loan. Step 5, examine the different home buying programs. Step 6, shop for a home. Step 7, make an offer. Step 8, get a home inspection. Step 9, shop for homeowners insurance. And finally, Step 10, sign the papers to your new home. Step 1, how much home can you afford? What you can afford depends on your income, your credit rating, your current monthly expenses, down payment, and the current interest rate. A good rule of thumb is that you can afford to buy housing that runs about 2.5 times your annual salary. Remember, you can always refer to Renewal's mortgage calculator to get a better handle on how your income, debts, and expenses will affect your ability to afford a home. Step 2, what are your rights? There are several federal agencies that govern consumers' rights regarding home purchasing. First, there is the Fair Housing Equal Opportunity for All. The Fair Housing Act prohibits discrimination in the sale, rental, and financing of dwellings and in other housing-related transactions based on the race, color, national origin, religion, sex, or family status, including children under the age of 18 living with parents or legal custodians, pregnant women, and people who have secured custody of children under the age of 18, and other disabled individuals. The Real Estate Settlement Procedures Act, also known as RESPA, requires that consumers receive disclosures at various times in the transaction, and it also outlaws kickbacks that increase the cost of settlement services. RESPA is a HUD consumer protection statute, which is designed to help homebuyers be better shoppers in the home buying process. It is enforced by HUD. There are several borrowers' rights. Borrowers have the right to shop for the best loan and compare the charges of different mortgage brokers and lenders. You have a right to be informed about the total cost of your loan, including the interest rate, points, and any other fees. You have the right to ask for a good faith estimate of all loan and settlement charges before you agree to the loan and pay any fees. As a borrower, you have the right to know which fees are not refundable if you decide to cancel the loan agreement. You also have the right to ask your mortgage broker to explain exactly what the broker will do for you. Additionally, you have the right to know how much the mortgage broker is being paid by you and the lender for your loan. You have the right to ask questions about charges and loan terms that you do not understand. A credit decision should not be based on your race, color, religion, national origin, sex, marital status, age, or whether any income you have is derived from public assistance. If your loan application is denied, you have a right to know the reason why. Make sure that you always ask for the HUD settlement cost booklet buying your home. It contains a wealth of information that will help guide you through the process. Finally, there's predatory lending. Predatory lending strips borrowers of home equity and threatens families with foreclosure. Borrowers are tricked into accepting unfair loan terms, usually through aggressive sales tactics. Often they are taken advantage of because of their lack of understanding of terms and involvement in complicated transactions. Be aware of the signals of predatory lending. They include, but are not limited to, aggressive and deceptive marketing, making loans without ample consideration to the borrower's ability to pay, financing excessive fees into loans, charging higher interest rates than a borrower's credit allows, and home improvement scams. Step 3. Fix your credit. How do you fix your credit and ensure that you have the best credit score possible? You should obtain copies of your credit report from all 3 credit bureaus. Once you have obtained the report, address any deficiencies that may appear on your credit report months before you decide to purchase a home or complete a loan application. In correcting the credit entry items, you should also make sure that your identifying information is correct. You can obtain more information about improving your credit in the Renewal Credit Classroom. Step 4, shop for a loan. Do your homework. If you do your homework, it will save you a considerable amount of money and time. Talk to several lenders. Compare costs and interest rates. Negotiate to get a better deal. Nothing is set in stone. Everything is up for negotiation. Finally, you need to make sure that you get pre-qualified and pre-approved for a loan. Step 5, home buying programs. Each state provides resources to help you navigate the home purchase process. These programs are sponsored by your state or local government or other organizations. HUD prepares a comprehensive resource for identifying housing programs state by state. You can research the following link to find out which programs are available in your state. That link is www.hud.gov. Step 6. You should now begin the process of shopping for a home. It's usually beneficial to hire a real estate agent to help you. That agent will help you determine your buying power. He or she will also assist you in finding and choosing a home. The agent will also ensure that the home inspection is very complete and thorough. You should also be able to rely on your agent to explain the different finance options. Your agent will guide you through the closing process. If you are in the position of where you have a home to sell, that agent should be able to provide current information on your home. In addition, that agent should market your property effectively. evaluate buyers who come to see your home, and assist you in the closing process as well. Step 7. You found a home and you're ready to make an offer. Again, at this point, you will continue to work closely with your realtor to determine the market. In determining the market, you will find out how much the seller paid for their home when they purchased it. Determine the seller's mortgage balance and examine comparable sales in that neighborhood. The realtor will also be able to analyze list price to sales price ratios. This means the list price is what the home is actually on the market for versus the sales price, which is what the homes actually are purchased or sold for. The realtor will also be able to analyze square feet cost averages to determine whether or not an offer is too much or too little for the house in question. And the realtor should also be able to obtain the home's history and the days on market, also known as the DOM. The days on market will determine what type of price you should offer. For instance, if a home has only been on the market for 3 weeks, the seller may not be willing to lower the price. However, if that same home has been on the market for 6 to 8 months, that can be used as a negotiating tool in your favor, because by then the seller might be very motivated to actually sell the home. Step 8. Home inspections. Although lenders require a home appraisal, that inspection is for the bank to determine whether the house is worth the price you've agreed to pay. The home inspection should be done by the buyer, and in that process the buyer will hire an engineer to do a home survey and determine the structural integrity of the property. The engineer will be able to identify potential problems that could require costly repairs down the road. If the home inspection reveals potential problems, then you, as the buyer, have a right to negotiate that price downward based on any defects or flaws that are found in the home. Step 9. Homeowners insurance. When it comes to homeowners insurance, most people immediately think of protection in case a fire destroys their home. But there's so much more to today's homeowners insurance policies. Let's examine what homeowners insurance covers and what it all means to you. First, what is included in a homeowner's policy? The complete package policy includes coverage for damages to your home. It also covers liability for any injuries or property damage that happens to others while on your property. This would even include your pet if your pet happens to bite a neighbor. It covers damages from a fire, tornado, and most other natural disasters. The only natural disaster exceptions are floods and earthquakes. In those instances, you need to purchase special coverage to address those problems. Coverage for normal wear and tear is also excluded from insurance policies. Special awareness. Be sure that you have adequate homeowners insurance coverage. It is many times disastrous for homeowners to be caught without proper coverage. If you live in a flood zone, make sure you have flood insurance, because your regular homeowner's policy will not cover damage to your home caused by flood. If you live in an area that has frequent earthquakes, make sure that you have a policy that covers earthquakes. Often, coverage for floods and earthquakes will require a separate deductible So make sure that you read the fine print in your policy so that you will not be surprised if you need to rely on these policies in the time of peril. Actual cash value versus replacement costs. Actual cash value is the cost of replacing the contents of your home minus depreciation. Thus, the older your furniture, clothes, appliances, and other contents of your home, the less likely you are able to recover the actual price paid for them in the event of a claim. Replacement cost coverage is very inexpensive and provides for full replacement value on your home and all of its contents. Replacement cost insurance is a very good deal indeed. And liability. Every homeowner insurance policy includes coverage for liability. This includes coverage in case someone slips and falls on your icy walkway, or if a tree limb falls into your neighbor's yard or on their home and damages their roof, you would be covered. Finally, step 10. Finally, you've reached step 10. You've made sure that your credit is perfect and you've shopped for a loan and you found the home that is perfect for you and your family. Now you're ready to sign the papers. There are several documents that must be signed at the time of closing. In fact, the signing process sometimes feels as if it takes longer than finding a home. However, these papers are very important and they form an integral part of the closing process. The first one is the Real Estate Settlement Procedures Act, or the RESPA, which we spoke about earlier. This statement acknowledges that you have been informed about how the closing process works and that you fully understand all the closing documents and financial obligations related to your mortgage. The Truth in Lending Disclosure Statement is a final statement that requires lenders to disclose all of the actual terms and conditions of the loan. This final statement makes any corrections to the preliminary Truth in Lending Statement which you received when you applied for the loan. The HUD-1 form is also commonly referred to as the settlement statement. It is developed by HUD to comply with Real Estate Settlement Procedures Act. It itemizes each payment made by the respective parties in the transaction. The mortgage note is the buyer's commitment to repay the mortgage. It stipulates the terms of the loan, including the loan amount, the interest rate, the address to which to send payments, maturity date of the mortgage, frequency of payments, and the change dates if the mortgage happens to be an adjustable rate. The security instrument is also known as a mortgage or deed of trust. It is a pledge of the property as security for the loan. It stipulates the same basic debt information that is found in the note, and it is recorded in the parish or county where the property is located. The warranty deed is a legal document that transfers the title from the seller to the buyer. It identifies the name of the seller as the grantor and the name of the buyer as the grantee. Depending on where you live, there are many other documents that may be a part of the closing package. Make sure that you work closely with your real estate agent to identify all of these documents and make sure that everything has been completed thoroughly. If at any point in the closing process you find that you do not understand terms or you find terms to which you do not agree, do not hesitate to speak out. This is the time to ask questions, and you as the buyer have a right to know what you are signing before you sign it. Congratulations! You have just completed Renewal's Homeownership One-on-One online course. If you are ready to be tested on your homeownership knowledge, click the link below to be routed to the examination. If you wish to take the test at a later time, please log in later using your secure user identification name and password. I am Angela Keys for Renewal Financial Services, and thank you.